Hello, everyone. Good morning, good afternoon, and good evening. My name is Leoncio Montemayor. I'm a project manager at Solarplaza, and it is my pleasure to welcome you all to this webinar, Solar PPA Trends and Prices in Europe. Our speaker of today will be Luca Pedretti, COO and co-founder of Pexapark. We'll be having, the slides are not working. Well, without further ado, let's just get started. Yeah, there it is. Thanks. Okay, so just a little bit on the agenda for today. I will start with a brief introduction about Solarplaza and what we're doing, and then we'll move on to the presentation by Luca. And finally, at the end, we'll have a Q&A. So feel free to write as many questions as you have, and we'll try to tackle them all. And then we'll have the end of the webinar, of course. So for all of you who don't know Solarplaza, our mission is to positively impact the world by accelerating the sustainable energy transition. We do this by organizing events around the world on solar energy. We've done more than 100 events, actually more than 110 now, in 30 plus countries around the world. So we were established in 2004. So we're now celebrating our 15-year anniversary, and we're based in Rotterdam in the Netherlands. So we're doing this webinar as a prelude to one of our events, Solar Market Parity Italy, the 18th of June in Milan. So that's 2 weeks from now, where we basically tackle the new era of unsubsidized solar PV in Italy. So just to give you a quick recap, this is the event program. So we'll have a pre-conference networking dinner in the city center of Milan, the 17th of June. And then the 18th of June, we'll have the conference. You can see a couple of our speakers over here on the right-hand side. And we'll be tackling topics such as the state of the market, wholesale electricity prices projections, winning business models for operators, 8 winning business models, developing bankable PV projects in Italy, PPAs. We'll have a good session on PPAs as well, financing status, and many other topics. So these are a couple of our sponsors and partners joining the event. So I would like to extend the invitation to all of you to join us in 2 weeks. And besides this, we're also hosting Solar Asset Management Europe. But we've been doing this in Milan, but now we're moving to Frankfurt in Germany. And Solar Asset Management is Europe's leading and largest conference dedicated to, well, the optimization of operational phase of PV plants and portfolios. Yeah, let's just get started. Some practical notes. If there's any technical issue, please use the chat box on the right-hand side, and my colleague Marco will be able to help you. Presentation slides will be available afterwards, as well as the recordings, but surprise, you can already download them on the handouts section of the panel, of the right-hand panel. So let's get started. I would like to introduce Luca Pedretti, COO and co-founder of Pexapark. Pexapark is a fintech for renewables. If you want a little bit more information on this, please check the handouts, and there's a corporate deck as well, so you can learn a little bit more about that. Luca has had 10 years of experience at Expo Trading from 2007 to 2017 in managerial positions. He has a long track record in originating transactions and business development in the renewable energy field. He's passionate about renewable energy, entrepreneurship, and building new businesses. And he has an MA in international politics and governance from the University of St. Gallen. Luca, I will hand over the control to you, and please, the floor is yours.
Thanks, Leoncio. Thanks and hello to everyone for your interest in this topic. Let me just see whether the mouse works. Here we go. Well, I'm already jumping ahead. Well, the topic is PPA trends in Europe. We draw upon our insights from supporting and doing transactions across Europe and also in the US over the last 12 months. We've been involved on probably 25 transactions. And at a certain point, we thought it's interesting to see what comes out. And the subtitle, as you see, is How Supply and Demand Drive Prices and Structures. And we thought to start off with a first small question, and basically to you, maybe Leoncio, you can launch it. Let's look at the demand side. And the question to you is, how much demand would you estimate there is for new build renewable capacity under long-term PPAs in Europe? This is rather on the low side, 5 gigawatts, or up to 40 gigawatts.
And Luca, what do you think? What do you think the audience will vote for?
Well, let's see. It's actually we never posted.
You know the answer, right?
I know the answer. I have an estimate. But it's crucial for PPA prices and structures, as it is all about supply and demand. So I'm actually very eager to see what guesstimates we could come up with.
Okay, let's interesting. Let's give a couple of more seconds, 10 more seconds, and we can show the results.
$20 gigawatts. Right. That's interesting.
Half the people say it's 20 gigawatts.
Perfect.
Right.
Now let's.
Is this what you were expecting, sort of, or?
No, I actually didn't think about it. What I would be expecting, because the question is very new as well to us. But let's dive into it. So. Perfect. Now, what you see here is an estimation of demand for long-term PPAs from international utilities. Now, this map is changing every time, but basically we try to list some of the most high-profile off-takers across Europe that offer long-term PPAs in more than 2 countries. So definitely there will be more off-takers in individual countries. If you go to the Nordics, you have additional companies. If you go to Italy or to Spain, you have additional local off-takers which are not covered here. Now, what is the main point we want to bring to you here is that altogether, a pure guesstimate from our side on the Pexapark team side is that maybe this is 7, 8, 9 gigawatts of total annual demand in long-term PPAs. Maybe it's 2 gigawatts more. We don't count the local suppliers, but that's just a guesstimate on how much there is in local demand for PPAs. So what else could come to it? Of course, corporates. Now, how much is there from the corporate side? So we have this from Bloomberg. And when you look at what has been realized up to today, it's only 300 megawatts. It's not a lot. What we know from our side is that there's probably 1.5 gigawatt in additional transactions going on, mostly from completely non-subsidized projects, mostly still in the Nordics. But overall, when you compare it to the utility side with the 8 to 10 gigawatts, it's still a very small fraction. So we maybe have together 10 gigawatts. And the question is, how could this develop in the future on the demand side? Now, before going into that, this is very important to understand because we hear a lot about corporate PPAs driving the future and solving all the problems of the renewable investors in terms of providing long-term PPA. Now, typically, when we think, and we come from the producer side and the investment side, we believe we have a very attractive proposition. And this being long-term fixed prices, eventually prices below current market prices. Now, from the corporate side, the 2 biggest issues is typically one, timing risk. You have a huge issue to buy all electricity at one point in time, because if you look at the chart on the right side of the slide, you see prices for German forward contracts, Cal 20, and you see how volatile the energy price is. And now, if you do your decision at one point in time, you might be very lucky or you might be not so lucky. So the typical behavior on a corporate side is then to always procure only a little bit. And of course, if you have a big share of your electricity in the total cost of your goods sold, so how much electricity cost is in your final product, there are not so many industries that have actually appetite for big amounts of power. And typically we from the renewable side, we want to sell maybe a big wind farm, a big PV in one go. So total demand, we believe rather to be limited. So we took an example. Here on the left side, you see the total annual consumption in Germany from households and industry. It's 500 terawatt, and half of it is about industrial consumption. And if you dig even further down, we maybe have only 50 terawatt of actual long-term risk appetite. Now the issue is the whole growth of this demand is maybe 1% a year. And if you think of it, how much is 50 terawatts? Now, depending on what full load hours you take, this is maybe 20 gigawatts of capacity, of renewable capacity. So this is not an awful lot of new capacity which you can actually build down. On the other side, we have one big exemption, and that's the growth in demand for new renewable capacity from data centers. So when you look at the full graph, we have in total in Europe maybe 1,000 terawatt of annual industrial demand, and it's very hard to get actual data on it. We estimate there's approximately currently 50 terawatts of electricity demand from data center, and this is growing tremendously. But even there, I mean, if you would apply 10% or 20% annual growth, that would probably mean in a year 2 to 4 gigawatt of additional demand for long-term PPA. Now, why is this important? Well, prices are the result of supply and demand. And when you look at what is being built in solar and wind, in 2019, according to Bloomberg, we will probably have something between 35 and 40 gigawatts. Now, most of this capacity is still under some sort of state support. Maybe there are green certificates or there's an auction for a contract for difference. But the total demand from the private side, if you would take away auction regimes and state support, is limited to 8 to 10, maybe it's 12, we don't know exactly, but it's a fraction. And of course, each market is a little bit different, but typically what we can already say is that most PPA markets are very much skewed to the buy side. It will also be interesting to hear from you how your experiences are, but that's our experience, is that there are way too many sellers, way too few buyers. And why is this important? What does that all mean for prices and structures? Well, I think the argument on our side would be threefold. So we would expect that an oversupply means lower prices. We would expect that an oversupply means higher risk premiums, and eventually also more risks pushed from the off-takers to the suppliers. But let's go through those arguments in time. Now, what do you see here? These are not forecasts. This is not your typical Baringa or Puri curve. What you see here are actual market prices calculated on daily basis. So these are price curves as traded today, as built by our pricing model, which is based on actual long-term quotes and market prices. So we, as Pexapark, pretend we would be basically an off-taker. We would apply the same hedging principles and risk management techniques, and then take in the market prices, and then we derive those price curves. And what we feel is that the increased supply on the long-term side of the supply. So you have a lot of sellers who would like to sell long-term, like 2029. Everyone wants to have 10-year contracts or longer. This is pushing the price curves into backwardation. So typically in many markets, we used to have markets in contango. So you would see prices eventually increasing over time. You still have this in certain markets, for example, Germany, but in heavy PPA markets, this is a typical feature we see, and we believe that it is a result of the increased PPA supply. So the supply is actually driving prices down. Where are price levels right now? This is also based out of our own pricing model, but we believe to be quite on spot. So for you with interest in solar, we took out 3 hot markets. So basically, of course, Spain and Italy are the hottest markets as regards solar PPA. What you see here, those prices are basically calculated each day. We publish them once a month for free on our website. And what is important for you to know is we take a standard solar profile, we take a standard PPA product, in this case, a pay as produced, in this case, a fixed hourly profile. We publish it we calculate it for a small volume without guarantees. So it's basically a simplified standard product, but it gets you a current view of where prices are. These prices move a lot with forward price levels and liquidity. I think liquidity is one of the key topics in our view, as basically you saw this very well in the Nordics. There was a few months ago a default of a trader, and it had a significant negative impact on liquidity on forward markets. And basically it didn't change much the price, but the willingness, the risk appetite, so those utilities offering long-term PPA has shrunk. So you have much more difficulties to place a bigger wind farm in the Nordics than just 6 months ago. So that's important when understanding PPAs. All this demand for PPAs, this is not given. There is no natural long-term market. It all depends on whether this can be managed on forward markets, whether there is liquidity and risk appetite. This as a big contrast, of course, to corporates who have an own use, who need to buy electricity to procure their consumption. Another important trend, which we believe is due to the fact that we have more supply than demand, is that the PPA structures in some markets are becoming simpler. Now, what does that mean? Now, many of us are used to tariff-like pay as produced. So what does pay as produced mean? As a producer, you don't need to care when you produce and how much you produce. The off-taker will always pay you the same price. Now, in certain markets, we see a very strong trend that off-takers don't provide such structures anymore, but in a very extreme, provide only baseload products. And what is the implication for you as for example, a PV investor, PV operator? Well, there's a lot of more risks suddenly to be dealt with on your side. So how to understand this graph? Everything we talk about in the electricity market is based on baseload products. So this is the main unit where big corporates and utilities trade. That's when you look at long-term prices or forward prices, the common unit is typically a baseload unit. So when your PPA and your net payout is calculated, typically we take baseload as 100% as the basis of the calculation. And then you have certain risks and costs associated with being a solar producer. The first thing is liquidity cost. So basically, just because the market offers in Italy 48, it doesn't mean that you will get 48. If you're a very big project, if you want to hedge at summertime, maybe there's not so much risk appetite, and people charge you some liquidity costs and risks. Depending on what market you are in, for example, in Spain, we only have one price for the entire market, but in the Nordics or in Italy, you have different area prices, and depending where your project is, you have maybe a higher or a lower price compared to the system baseload price. So that's typically what you would have covered in a baseload PPA, typically covers those two risks. If you have a monthly PPA, maybe you get some extra value, maybe because you have more production in month with higher prices. And then we come to the whole volume and profile side. As we all know, we're in the intermittent production. So you don't produce every hour the same amount as baseload. Now, this can be, of course, positive. It can be negative. It's very hard to predict how this profile value will look in 2 years, in 5 years, in 10 years. But that's the perfect pay as produced PPA. It takes away all those risks. Now, when this is all moved to the producer side, it poses, of course, challenges to you. So basically, you need to be able to price those risks. You need to be able to structure the PPA. And basically, it possibly will also change your business model, because many lenders are coming from this field, that they would like you to have 10 years pay as produced. And in certain markets, you just can't get it anymore. So we see a big trend towards going merchant. And I think that would also be an interesting poll question to you. What basically you, from your side, would see as a main challenge in going merchant. So is it finding investors actually and educating them on what merchant means? You have completely different risk return profiles. It can be finding lenders actually willing to lend. Then, of course, what we just talked, you need to add a price tag to all of those risks. And in many cases, it doesn't stop. When you hedge maybe with a shorter tenor, with a base load, you need to continuously engage with managing those risks or other things.
Okay, let's give a couple of 15 seconds for the audience to answer. Yeah, what do you think? I think all of them are are valid points, but I would go more for I think the ability to manage energy price risks on a continuous basis. I think, but let's see what the audience.
Yeah, right.
By the way, I would like to, now that we're at this, just a reminder for the audience to input your questions to the question box so that we can, answer all your questions later.
Yeah, that's very interesting. So from our talks with clients, we find everything. I think I'm surprised on the first question. We hear a lot that there's a lot of education to be done to explain the new world, the PPA world, the merchant world. Definitely we hear about lenders. So I think it's very well diversified. All the questions come. All the questions are somehow relevant. And it just shows that there's quite a lot of things ahead of us in tackling the merchant world. And if I may conclude our presentation with the last slide, it's not from us, this little graph, it's from McKinsey, but I love it. It's basically, they try to classify how players position themselves in this new, let's call it merchant world. And basically you have on the horizontal, you have risk appetite, from risk averse to really a risk taker. And on the vertical, you have degrees in risk sophistication. And now the whole industry is coming from this little corner on the left downside. So basically from an energy risk perspective, we didn't have to do anything. You didn't have to quantify energy risks. It was not important to manage energy risk. Basically, it was something, there were other risks in the focus when the feed-in were introduced. You had technology risk, but this is ending. We're in a post-feed-in world. We're going into a subsidy-free world. We're going into a PPA world. And whether we want or not, what we see is that everyone is being pushed up to the upper side. So everyone is investing in risk management capabilities, be it on the pricing side. We see most people actually doing the step into the middle segment, so getting transparency on their position, revenues, and risks, and actually managing risks on project basis. And I think it's getting more sophisticated that people start to have alternative funding, start to manage on a portfolio basis, and build in-house pricing tools. And I think only when you have this sophistication, you are also able to decide on how much risks you want in. And it will be very exciting to look back in 5 years and see how the industry has evolved. We believe it will be more merchant. As we said, we believe the long-term PPA not to be a natural offering in the market. And we also believe that there is not sufficient demand for long-term PPAs to cover the full potential of solar and wind development. We have 40 gigawatts being built now. Costs are still falling. I don't see 40 gigawatts of long-term PPAs every year. So the future, if you want or not, will be merchant. And to be able to manage this, somehow you have to get a grip on pricing and analytics of energy risks on the merchant. That's it from my side. Thanks for your interest, and let me see whether we can tackle some questions.
Thank you, Luca. Thanks for your clear and insightful presentation. I would just like to start with a personal question. I mean, you were working at trading for almost 10 years back in the, let's say, feed-in tariff area. You mentioned technology risks, right, as one of the risks that you were sort of quantifying. Were there other risks in this sort of feed-in tariff era?
Well, I think the key risk in the feed-in tariffs were introduced to help investors focus on the technology risk. Mm-hmm. It was very unclear how costly it was to maintain a turbine, what will be availabilities, but there's a lot of data. Of course, volume risk was a very big risk. Estimating what is your P50, what is your P90. Well, the industry has become very professional, very mature, having now 20 years of data. I think this risk is very well understood. Definitely. These risks still exist in the new world. Just in addition, you have now energy risk.
Okay, I see. All right, thanks. We have quite some questions, so I think I would like to start one from one of the audience, which I think maybe a lot of people will have. So basically the question is, it's a bit long, but I'll try to summarize, is why the first PPA with an offtaker is not for the total duration of the plan, so 20-25 years, but only for 5-10 years. The question follows that the investor of the solar plant has to be sure that after the first 5-10 years PPA, a new PPA will offer still attractive prices for the rest of the solar plant's lifetime, right? So let's say the last 15 years. But just finishing the question, normally the prices will fall for PPAs as the technology costs are still dropping. So what's the rationale behind this?
Well, the rationale is that if we talk from a utility point of view, they are risk managers and traders. So they will not just buy electricity and not manage it. So if they buy from a solar plant in Italy at 48 euro, they will not just hope that prices will be ever higher and they can lock in a profit, but what they will do is they will find other off-takers to buy from them, and they will basically trade all the volume on the market, and the market is limited. So the market typically only trades a few years. So if I buy from you 10 years, I need to manage my risk with the available trading instruments. And the more I buy from you, if I were to buy from you 25 years, these risks at some point get too high, too risky.
Okay.
So the market, and let's have it very simple, a very simple analogy. If you look at your household bill, your energy price is fixed for maybe 1 to 2 years. So the natural market is typically limited to 2 to 3 years. So long-term PPAs are rather the exception.
Okay, I see. I think that pretty much answers the question. Let me move on to the next question. A question is, does the fixed hourly profile mean baseload? Because, well, I think this is a question from the Nordics because the wording is different to Nordics.
That's correct. Basically, in the Nordics, the main product right now used in PPAs are monthly baseloads. So where you basically transact on a fixed volume for each hour the same, but for each month adjusted to your profile. Whereas a fixed hourly profile is that you really commit on each hour a different volume. So you take probably a standardized solar profile, and for this profile you get for each hour a predefined volume, you get a fixed price. So it's basically also fixed volume, but just with a much more detailed definition for each hour of the volume.
Okay, I see. Yeah, question is regarding the the risk appetite. So you mentioned that there's a total risk appetite of 8 gigawatts, right? Are you already taking into account the eventual shutdown of coal and nuclear?
No, I think no, I'm not. I'm just looking what is right now being offered in the market, and I note that it's very opportunistic. So I just mentioned the recent liquidity crunch in the Nordics. What you have to imagine is that, for example, if some of the 2 big PPA companies in Spain, if they do 2-3 deals, maybe they have enough risk into their books and they will not offer any additional PPA. If there is some change in interest rates on the market, if there is a new change on regulation with MiFID, maybe certain traders will stop offering it. So the whole long-term PPA offering from the private utilities is very limited. We see already now some German utilities offering long-term PPAs, where we believe it is driven a little bit by the coal phase-out and the nuclear phase-out. So maybe that could be a future driver. I don't know, but as of today, that's how we would estimate it.
Okay, I see. And these German utilities that you're mentioning, yeah, how long is the tenor of the PPAs that they're offering?
That depends. I mean, that depends really from companies. I think the most basic is 10 years, but you have certain companies going much longer. But definitely below it still will be something with a 1, 15 years maybe, but the norm would be rather lower or shorter. Okay,
I see. And do you see a difference in tenor length and well, of course, volume as well? I mean, in between different countries. I mean, you mentioned Spain, Italy, Nordics. Like, is there a significant difference in the tenor lengths of the different markets? And is there a cost to this, or?
Yeah, I mean in the tenors there's not big differences. I think in the availability there's a big difference. There's much less availability in certain markets due to lower liquidity. And then of course also on the structures. I think every market has its peculiarities. I mean, the Nordics are a very well-established market. They have been doing PPAs for 10 years. In Italy and in Spain, it's really an emerging market. First gigawatts of transaction being closed in Spain. So the market is very professional, but you have a lot of differences in the structures being offered. So there's not really a standard, a standard script per market.
Okay, I see. Yeah, I think let me check this question, which was related. Yeah, and I mean, you were talking, for example, the Nordics is quite developed, no, and Spain and Italy are just nascent markets, so to say. Could you make, this is a question from the audience, could you make comparisons to the global solar market? For example, could the advanced EU solar market be the future of US solar, which is still reliant on subsidy? I mean, comparing Latin America, Europe, US, etc.
I can make some references to the US where we have experience. When you look at the ERCOT market in Texas, yes, it's still mainly driven by tax equity, most deals. You see that merchant levels long-term on the solar side are maybe 25 euros. So I don't see, I mean, I'm not a project developer, investor, but when we see European levels, which are required in Spain and Italy to have non-subsidized solar, so I think there's still some price gap in the US market. Eventually, though, if subsidies will fall away, for example, tax equity, market prices will have to go up. And that could be then a result.
Okay. So, do you expect the markets to become more liquids with more as more PPAs start becoming available?
No, I think to the contrary. I think we see actually more PPAs mean, I think it's just more sellers. So you have more people wanting to sell. So I think the trends which we just described, higher risk premium, simpler structure, will just intensify.
Okay. And is there a way? I mean, it's a buyer's market right now, right? Yeah. Is there a way to incentivize a shift in this balance to make it a little bit more balanced? Yeah, equitable.
Yeah, it's a very good
from the demand side.
It's a very good question. I think the biggest potential definitely is on the corporate side. As you have seen, overall, we believe it's limited, but when there is potential, it's there. And I think the biggest challenge is credit. So I think we would need some innovation on the credit side, pooling of PPAs or risk insurances, credit risk insurance could help a lot to drive additional PPAs from corporates.
Yeah. I mean, well, we do see that in the US, corporates are super active on the procurement of energy. I think I just read that yesterday. Facebook actually invested tax equity in a project. But of course, in Europe, I think it's driven by a market. We have initiatives like RE100, which is pushing, of course, corporates to procure energy from renewable sources. So moving on. Yeah, we actually have a lot of questions, Luca. So I'm trying to go through them. Yeah, there's a question here on the corporates as well. So how likely are corporates willing to fix corporate PPA prices rather than pay as produced with quote floating prices, unquote?
Yeah, that depends. I think most transactions which we see now in Europe are with international tech companies, Amazon, Google, Facebook, SAP. And the typical structure there is pay as produced, which is very friendly for producers. It's a fixed price, typically more than 10 years. Now, of course, there's a very fierce competition on almost auction-like to land some of those PPAs. So in certain PPAs, I noted this also in the presentation, we believe it's more lucrative to sell to private utilities as the competition is not so fierce.
Okay. All right. Moving on. Yeah. So also continuing with the corporate, what kind of levered cost of equity are you seeing across these markets for corporate PPA projects?
I cannot comment. I'm
So,
fully
okay.
focused on the energy risk side, not so much on the investment.
Okay, 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 fair enough. What could be the role of banks in this context, in the financing?
Also, very good question. I mean, I think banks have the same challenge as investors, as they see that the full service, like the pay as produced long-term PPA, is rather an exemption. And if they want to lend and continue to lend and increase lending volumes, they will have to come to grips with merchant risks. So I think
Mhm.
all what we talked about, understanding energy risk, being able to quantify them, that's the same challenge and topic on the lender side.
Okay, 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 okay. And what does
Maybe
the, yep,
maybe
go on.
just a short analogy. When you look at the gas exploration, gas production industry
Mhm.
25 years ago, in order to finance new gas exploration, typically it was required on the gas side to have 25 years take or pay contracts with fixed
Mm.
prices. And with that
Yes.
gas, they could lend money. How is it done
Mm.
today? 100% spot.
So you
So
expect something similar for the renewables in a way?
why not? Why not? Why not? Because it's just capital structure will change, risk return structure changes. There is capital around. I think it's a new story. So far, we come from the feed-in world.
Yeah,
Investors took the feed-in park as a fixed income,
yeah.
and now we have something new. But definitely there will be capital. That's why it's so fascinating to say, let's wait 5 years and look back how it evolved. But there
Yeah.
will be funding. I think it's just different business models.
Okay. Okay, okay, definitely. And who will, like talking about 5 years, who will be the biggest PPA off-takers in 5 years? Is it gonna be utilities? Is it gonna be banks, insurances, or corporates? Question from the audience.
Good questions. I don't know. I think corporates have a way to catch up. I think the overall demand is limited. I think overall it will be not much higher. I think it will be some utilities and corporates, maybe 10 to 20 gigawatts a year, and the rest will be merchant.
Okay, okay. Okay, and do you see this? This is a question for myself. Do you see in the future, maybe in a crazy future, that the end consumer might aggregate and start, dealing PPAs with producers? Sort of
Yeah,
eliminate the utility, so to say. I mean, I'm just thinking, like, for example, with blockchain technology or so, where you can
well,
aggregate a lot of end consumers and sell directly.
yeah, why not? The question is, how much are you personally, as Leoncio, interested to have a fixed price of 10 years for your
Well, I would
energy
love it
company?
because my energy price is always rising.
Well, maybe then this. I mean, we have first crowd-funded projects in
Yeah.
uh, in Spain with an
Yeah.
off-taker. So why not?
Yeah, I think yeah, I think this is like a new business model maybe for utilities to explore. I mean, for future utilities or utility 2.0. Okay, moving on to the next question. This is a simple one. Is the Pexapark forecast curve nominal or real?
It's not a forecast. It's a
Oh
price
yeah,
curve as
yeah,
of
of course.
today.
Sorry.
That's
Yeah, yeah,
just
yeah.
important. So it's
Yeah, definitely.
what if you trade today, this is what you likely will get. So it's a real price.
Okay, okay, no, yeah, yes, okay, I see. And what's driving the main difference between Spain and Italy? There was like I think around 12 euros.
Yeah, yeah.
Yeah, what's the
Well,
driver here?
every market has a different supply and demand. For example, in Italy, we we. I mean, let's look at Spain. Spain is very well diversified. You have nuclear, you have coal, you have wind, you have solar, you have hydro, and they have a different supply stack and different price curves as compared to Italy. So the fundamental setup of supply and demand, of course, is the main factor driving the overall price levels.
Okay. And do you have a experience with negative prices? Let me see. Do you have experience? Have you experienced? I'm reading the question. Have you experienced negative prices out of fixed PPA prices and additional area adjustment in Italy? The question goes. I know, for example, in Basilicata, they have at least negative prices there. So how does that work in combination with fixed PPA prices?
Yeah, I mean, this is a very important topic. Now, we believe if you commit in a baseload PPA on a fixed hourly profile, negative prices should have no role, because you commit financially to deliver a volume, so you should actually not be penalized if prices are negative. Because otherwise, I could ask you the question, why not reduce the volume if prices are at €5? So I think if you have a baseload contract, a fixed hourly profile, then negative prices should not impact.
Okay.
If you have a pay as produced, I can see the arguments why negative prices could have an impact on your PPA volume.
Okay, so what would be your sort of recommendation for the producer here?
Well, the recommendation is it depends on the contract you have, as I said. So if you have volume commitments, I believe negative prices should not impact. If you have a full pay as produced, I see an argument why negative prices should or could impact your PPA volume.
Okay. I hope that answers the question. Here's how do you say an interesting question. Do you see a possibility that the whole PPA market is a big bubble and that it will be off the table in 3 years? It says the question says.
Yeah, a bubble. I don't believe it.
Bubble, no. Okay.
I see certain high risk topics, especially on suppliers that don't hedge the PPAs. So this could lead to some risks. We see some PPAs with very weak credit guarantees. So in a downturn, that could pop up. But I would rather fear that right now the real boom time is on new build. And there are more PPAs because there are so many more non-subsidized projects. So I would rather fear there to be higher interest or a downturn in the economy rather than on the PPA side.
Okay. Yeah, I would agree with that. I don't think it's gonna burst or anything. A question about this graph actually. So the question goes, what does the liquidity cost take into account in the base load PPA structure graph? Yes. So what does the liquidity cost take into account here?
If you see today a price on a market screen for Spain or Italy, let's say €55 for Cal 22. I'm just making an example. Now, this holds if you want to sell 5 megawatts. Now, if you come and want to sell today 20 megawatts, the price will decrease. So there's always a bid-ask spread for each price which is quoted. And the further out you go, if you want to have a fixed price for 10 years, this liquidity risk increases this cost. And typically when you ask for a baseload PPA, this risk is included because you go to, you're the producer, you go to an offtaker and say, hey guys, I want to sell you each year for the next 10 years, 200 gigawatts. So I come to you and I want a fixed price now for 2 terawatts. So offtaker needs to fix this price in a go. And that's why typically this liquidity cost has a huge impact on the overall pricing. This can be very low in certain markets like Scandinavia. This can be below €1. It can be very high single-digit figures in markets like Spain.
Like here in this example is around 3.7.
I mean, this is an illustrated example. Just to make the.
But you said in the Nordics around 1, and then Spain, single digit but high. No.
You cannot make a simple statement. It depends. If you're a 20 to 30 megawatt wind park, then it might be low. If you're a huge monster wind park of more than 200 megawatts, this cost can be higher. So it depends on the volume, of course, as well.
Okay. Do you think there will be any impact on the ongoing duty war between the US and China on PPAs in Europe?
I need first to think. I don't know how this could impact the PPA market.
Okay. Well, yeah. Okay. Fair enough. What are your expectations to spot market prices in Germany, Spain, and Italy going into the next 5 years? The question reads, obviously the forward market is skewed to the demand-supply situation today for long-term PPAs. Leaving this aside and focusing on the real daily demand, what are your expectations?
I'm too long in the business to make any statements about future prices. They're always wrong. They're always wrong.
Always wrong.
Always wrong. The only thing I can tell you is it's worthwhile to look at fundamentals. One little example: Spain, 41 gigawatt of peak demand. Now, at some point, if you continue to add more renewables, it will have dramatic impacts on daily prices at certain hours. It's just a simple supply-demand balance. So this cannibalization is real, and this can happen, and it's something to watch for. But where price levels will be, I cannot predict.
It's a fool's errand to try to accurately predict all the prices. I mean, there's a lot of unexpected variables. Fossil fuel prices, oil and gas prices, how would they affect the PPA prices?
They have a massive impact. Of course, the PPA prices from utilities are one-to-one derived from forward price levels. So, and forward price levels are derived from the supply-demand balance from the generation stack. So oil prices have a massive impact, coal prices, CO2 prices, gas prices, and then depending what market you're in. For example, if you're in the UK, gas prices are very, very important because it's still driven by gas. In the Nordics, it's more important whether there is a lot of water or not so much water, dry or wet year. So each market depends a little bit.
Okay. So we're reaching the end of the webinar. Actually, we're I think done with all the questions. So what would be sort of your last comment so that the audience can go home with this?
Well, the best learning is by doing. So I think the most interesting thing is actually we believe the most potential is in the better you understand each risk and are able to quantify, the more opportunities you see. So if you narrowly focus on the long-term pay as produced PPA, you might miss a lot of opportunities.
Okay, and anybody can contact you, right? I think we're showing your email.
In my email, you see our webpage. You can download the price reports, or you just can shoot me an email. Happy to chat.
Perfect. Well, Luca, I think this is the end of the webinar. Thanks a lot for your time. It was a great and insightful presentation, and we managed to answer all the audience questions. So thanks a lot. I hope you enjoyed it, and I would like to also thank all the audience members for joining us today. It's been a pleasure. Hope to see you next time. Thanks, Luca, again, and you. Hope to see you soon.
Thank you. Have a good day. Bye.
Have a good day, you too. Bye bye.